So a lot of people are concerned today and really wondering why AMC stock, as well as a lot of other stocks, are not going to the moon today, because the executive order does go into effect today. Now, there can be nuances between the timing, the margin calls, all of that. I will just say that it can take a little bit of time. Like this article from franknez.com does say, and this is the article that we have been talking about, is specifically going over this executive order, says, well, those 365 days are coming to an end, and it seems June of 2022 could be a big month for AMC stock. June of 2022. Yes, today is the day the executive order goes into effect, but it isn't necessarily the day that you have to see a major rally. I actually think it's going to be next week. Now, let's read the rest of this article. So he says, I'd like to make clear that the information provided in this article is merely only information backed by real government documents and data. This excerpt is not to confirm a specific date where we can anticipate AMC stock to move up in price action, but rather acknowledge what's happened in the past that could very well occur today. Redditors were wondering whether there was a document that confirmed the replacement of Executive Order 13959. Essentially the same exact thing, but this was President Trump's executive order. And here it is. The order was replaced by Executive Order 14032, which is Biden's executive order. It says one of the biggest differences between these two orders is that the previous executive order affected a total of 30 securities. And this is essentially what caused the January as well as the June rallies with AMC stock. So it's very important that you guys actually pay attention specifically to this video. If you guys have to, go ahead, rewatch it a couple times over if you need to, because it is very important, and we're going to go over the data around AMC and all of that here in just a second. But it says Executive Order 14032 will affect more than 70 securities. I will go ahead and link this article down below in the description of this video if you guys want to go check out the list of securities that this will affect. But nonetheless, Executive Order 14032 is to go into effect on Friday, June 3rd, 2022. Will Executive Order 14032 trigger a short squeeze? Given the nature of the rule, Executive Order 14032 will prohibit institutions to use Chinese securities as collateral, which will result in large margin calls. When Executive Order 13959 disarmed institutions with this collateral in January of 2021, AMC surged to $20+ per share. The order was amended as stocks surged, resulting in sharp declines, giving institutions this collateral back. The amended date moved to late May, where we saw AMC reach an all-time high of $72 per share. Institutions were then given their collateral back on June 2nd for a period of 365 calendar days. This collateral will no longer serve institutions on June 3rd until the order is amended again. The expiration date in early June leads us to conclude we will see major short covering in heavily shorted securities such as AMC stock. And because the list of Chinese securities being affected has increased, this means the amount of collateral that will be removed has also drastically increased. If history repeats itself, this next surge will be massive. That's not even taking into consideration the next amended date. Will this executive order lead to Moass? I've mentioned in previous articles I don't think institutions will be held accountable for synthetics, but I hope I'm wrong. One thing I do know is retail investors will need to keep an eye out on AMC short interest data to identify whether short sellers are calling it quits or sticking around longer. No matter how high AMC's price surges, the short interest data essentially provides investors with insight on how much fuel is left in a short squeeze play. When AMC rose to $72 per share, the short interest had dropped to 16 from 20%, and that's, like I said, in June. You really didn't see many shorts covering, and there you have it right there, 16% from 20%, so not a big deal. Only 4% of the short interest actually covered in June. AMC's current short interest is 21.57%. Now it is much higher than that, and we'll talk about that in just one second. But he says, we've also seen that AMC short sellers have hit a record high number of shares on loan. This means they owe more shares today than they did when AMC surged to 20 and $72 per share. A third run-up will be huge for AMC stock. Only time will tell whether Executive Order 14032 is the catalyst or not. AMC is going to reach a new all-time high. I believe AMC is going to reach a new all-time high from its previous record high of $72 per share, simply because the data is there. The data that told us AMC was going to 20, then 72, and now even higher is still there. It's just taking longer than traders would like. But despite how long it takes, you can't change the data. You can't change the fact that short sellers now owe lenders more than ever. And at some point, these lenders will need their money back. Executive Order 14032 seems like a highly likely trigger for AMC stock. I'd love to hear your thoughts on the matter. Leave a comment below for the community to see. And this is why I like this guy. This Frank Nez guy, franknez.com, puts together very thoughtful articles on a lot of retail stocks. Specifically, he's a big fan of AMC stock. And, you know, it happened the first time. The executive order, this exact executive order, well, technically Trump's executive order in January, and then in June, caused those rallies. So I think it's pretty safe to say it's probably going to cause another rally, but it's hard to put like a direct date on it. What happened last time does not have to happen again in the same manner. There can be a bit of a delay, right? If you or me get a margin call, you actually have like 2 to 3 days to service that margin call. And I would imagine these hedge funds get a little bit of that special treatment. So there's a little food for thought there. I don't think the fact that we are down, 4 or 5% today really changes anything at all. I think if anything, it's just an opportunity to get into a position if you already did not have one. Now, current short interest of free float, 23.42%. So we are dramatically higher than we were in June, higher than we were in January, and that's a lot of the float that is currently sold short. But look at the free float out on loan. That is up 3.44% in the last 7 days. Now at almost 35%. So there is a lot of shares that are currently out on loan, and they just continue to borrow more. For the day, 3.31 million shares that have been borrowed. Return shares up 367.05 thousand. So they continue to short AMC stock, and that's probably why the stock is going down. And I personally think a lot of it is done through algos, right? I think a lot of this is not really people using their head and making a calculated decision. I think it's just literally, you know, XYZ happens in the markets, short AMC, short these stocks that are not profitable. So I think that's a real recipe for disaster for a lot of hedge funds that, you know, are really shorting the stock based off of algos instead of real human decisions, because I don't think it makes a whole lot of sense right now, especially when the stock's trading at $12 to be shorting the stock. There's not a lot of risk to reward in that. The odds of AMC going up 50% from here are a lot better. Say AMC going to like $16, $18 per share are a lot better than the stock dropping 50% and going to $6, right? So the risk to reward is not there for the short sellers. It's definitely in the favor of the long buyers and holders of AMC stock at the current moment. Now, the current shares that are sold short is 120.74 million. Cost to borrow max sitting at about 19.21%. Cost to borrow average at 14.2%. Cost to borrow minimum at 5.1%. Jeez. 100% utilization. Days to cover sitting at 3.5. Shares out on loan 179.57 million. So like I said, you do have a lot of shares that could potentially be used against us, and it looks like they are certainly being used against us today. Now, if we take a look at the option activity, we can see 11 orders totaling $2.69 million for the day. Positive order value of 23% over the past week. 143 orders totaling $57.79 million. Positive order value of 45%. So, you know, looking pretty good across the board. Even as far as the option activity is concerned, you're definitely seeing a lot of calls and puts coming through. And I will say the puts, right, that caused the market makers to go out and short stock, and that is not reflected in the actual short interest numbers. So the real short interest, including, you know, the puts and the market maker activity, is a lot higher. As you guys can see on the option chain, just for that June 17th expiration, you have 118,000 puts that are in the money. That is a ratio that you do not see or I should say a number you do not see all that often. Whereas on the call side, you only have 6,700 calls that are in the money, 276,000 calls that are out of the money. And for July 15th, it's even worse, especially on the call side. 7,200 calls that are in the money, 340,000 calls that are out of the money. So I do think if we do see a big run in the month of January, in June, then you're probably going to see a full-on gamma squeeze for the next like 10 expirations, right? Until July 15th, because these premiums are so cheap. So if AMC were to go over like $21 right now, you're gonna see the market makers that have to hedge out a lot of options for that even July 15th $20 strike, where there's a lot of open interest. Now if the stock goes to 40, 50, 60, 70, they're gonna have to hedge out all of these options, and you're gonna see a massive gamma squeeze across the board. Jeez. Hit the like button, subscribe to the channel for the illness that I have and providing you guys this information. I do appreciate every single one of you guys. But nonetheless, what actually happened for the day and why the markets are down right now. Payrolls rose 390,000 in May, better than expected as companies keep hiring. And this is bad, obviously, for what the Fed is potentially going to do, right? If the job market continues to heat up and people are just getting hired left and right, then there's really nothing stopping the Fed from slowing down or stopping raising rates. So that's definitely not a good thing for the stock market, good thing for the overall economy. But what is kind of bad and what is being seen as definitely a bad thing today was where we lost jobs. So we actually lost about 60.7 thousand jobs in the retail trade sector. So that is not good. So like retail stores, so on and so forth. And that's a little bit interesting because you wouldn't expect to see a major decline in that way. Like, this is the third largest bar on this graph. The other two largest ones were job gains, obviously, and that was in the leisure and hospitality. That was the number one, 84,000 new jobs added there. Professional and business services added about 75,000 jobs, and then government added about 57,000 jobs, but retail trade lost more jobs than the government added jobs. So I do think it's kind of concerning, and I do think that's why the markets are down. Nasdaq down about 2.5%, S&P down about 1.54%, the Dow Jones down about 0.87%, the Russell 2000 down about 0.83%. So it's definitely a risk off day across the board. You are not seeing the VIX spike as much. It's only up about 2.22%. I do think a lot of investors right now are pretty cash heavy, and there's not a huge reason to go out and buy protection on assets when you are so heavy in cash. But all in all, guys, circle back to the executive order. I do think June is still going to be a massive month for AMC stock, for a lot of stocks that are heavily shorted. Obviously, 23% short interest is getting pretty high, and I do expect the cost of borrow rates to continue to climb as well, making it harder for shorts to actually remain in their short positions. And given where the bond market is, the stock market, literally like the global stock market, is in a very bad place. Even real estate starting to soften up, just credit lines becoming super expensive, margin loans becoming super expensive, cost to borrow rates going up. All of these things are bad for hedge funds with short positions. If we start to see that bullish reaction, which I do think we will start to see next week, that's when things are really going to heat up and get really good for us long holders in AMC. Now, something you guys just got to be patient with. I know a lot of people were excited. I even heard people talk about like June 1st, like that was the day the executive order went into effect. No, it does go into effect today, but it does take some time to play out. History does not always repeat itself, but it usually does rhyme. And what happened back in June is, yes, May, I should say, May 27th, the executive order went into effect. The stock did go up about 35.5% that day, dropped a little bit the next day, went up 22.66% the day after that, and then ultimately on June 2nd, the stock had went up, obviously, 95.22%, but it was days after the executive order went into effect where you actually did hit the high. So I would just be patient here. If you don't have conviction in the trade, do what you got to do. Sell out. It does not matter. I think it's only a matter of time. And, you know, what we're saying here on YouTube, what the due diligence is showing us, you know, will come to fruition. It's just, do you have patience for it or not is the real question. Let me know if you do down below in the comment section. Hit that like button. Subscribe to the channel for this illness, not COVID. Hopefully not COVID. But nonetheless, thank you guys for watching. Get yourself free stocks down below in the description of this video with Webull, Moomoo, and Public. And if you guys want to come trade with me live in real time, link down below in the pinned comment as well. Thank you for watching, and I will see you in the next one.